Great. Hi, everybody. It's so nice to, well, I can't quite see you all. I can see a few of you. It's great to be here. Thank you for inviting me. So I'm going to keep it really quick because I know we've only got half an hour. So I'm Julia. I'm the founder and CEO of Enter the Arena. And I'm just going to say a little bit about me. So I've been in the startup industry for about 25 years now, building, funding and scaling businesses. So as an entrepreneur, I've been in your shoes. I know what it's like building a business, raising investment and all the pain and heartache that goes with that. My last business was a fashion tech company called Upper Street, where you could design your own shoes. And I raised about £2 million of investment for that company from friends and family, from the bank, from crowdfunding, from venture capital, you name it. I did it, got the t-shirt and the scars to prove it. And 7 years ago, I set up my current business, which is called Enter the Arena, which is all about supporting high growth female founders like you on that journey of raising investment. And the reason I set up Enter the Arena is I saw firsthand how challenging it is to raise investment, how it's such a kind of black hole, this world, this world of investment. It certainly was when I was raising. And as a female founder, there were so many challenges that I came across, particularly as I had a very female focused business. And it was tough. And I got there in the end, but I had so many other female founders on the way say to me, Julia, can I just have a coffee with you? Can you please tell me, like, how did you do this? What did you do? How were you so successful in raising that money? So I set up Enter the Arena to support other women on that journey. And I think over the last 7 years, I've supported, at least, a couple of thousand female founders on the way with one-to-one coaching, with group coaching, masterclasses, talks, supporting them through that whole process of raising investment. And it's been great. But I felt that actually what I really wanted to do was to get this piece around, I guess, educating as many female founders as possible and as early as possible on what this whole raising investment thing is all about. What does it mean? What is this investment ecosystem? Who are VCs? Who are angels? How do I find, what do I need to do to raise investment? How do I go about it? How do I navigate this world? And so I did the classic kind of, in a pandemic, wrote a book, thinking, how hard can this be? And the honest answer to that is it's quite hard writing a book. So it's taken best part of 2 years to write it, edit it, publish it, get it out there. And here it is, my book, which is super exciting. And my goal really is just, as I say, to get this out to as many female founders as possible, because we need to empower ourselves with the knowledge and the skills and the support to go out there and smash it. We see all these stats about how little funding goes to female founders. I'm actually speaking at an event today where we're talking about all of this with lots of important people in the industry. And the investment community want to back female founders, and there is a lot the investment community needs to do to change, to be more approachable to female founders. But they are also saying that not enough female founders are going to them. And so there's a big piece here, I think, about us being, if we feel like we need investment to go out to fuel our growth, is having the knowledge and the skills and the courage to go out there and do it. Because if we don't, these stats we read are going to become a self-fulfilling prophecy. So that's me. It's such a pleasure to be here. And I think probably the best use of the time is if I've got any questions that I can answer for you guys about raising investment, then I'm here to help.
Yeah, I mean, it's definitely the perfect group of people to be speaking to, because this whole program is about raising investment. And most people here are either fundraising or kind of deciding whether they want to be fundraising. So going through what it takes to raise from angels or VC versus bootstrapping or thinking of other ways to do it. So if anybody does have any questions that they want to ask Julia live, feel free to use the raise hand function. You can always use the Zoom chat as well, which is totally fine. Catherine Ann, we will jump straight to you. Take it away.
I'm just looking at myself here. I look as if I've been in a car accident. It's quite terrifying. Hi, Julia. It's lovely to see you again. I just want to ask you, so you said that the people you're speaking to are saying that the female founders are just not approaching them. How can we position ourselves better? How can we make ourselves more visible? What's your advice on approach?
How to approach investors?
Yeah.
The more progressive investors out there are making it easier to approach them. My favorite ones are the ones where you can submit your pitch deck on their website, but there's not many that do that. And so we have to be building relationships with investors as soon as possible. The sooner you start doing it, the better. If you haven't built relationships yet, that doesn't mean you can't go out and raise investment. But I think LinkedIn is a fantastic tool that is actually in some ways democratizing access to investors for female founders, because we can reach those people from the comfort of our sofa at home now, instead of having to go to networking events over beers in the city on a Tuesday night, when actually we'd much rather be putting our kids to bed, right? So I think LinkedIn is a great tool, and wherever possible, using your own network to get to the people you need to get to. And again, with something like LinkedIn, you can usually see that you're only 1 or 2 steps away from being connected to the right person. So a lot of it is actually just about going out there and doing it, is building that, finding that list of people you want to speak to and just approaching them. And I think so often what we do is we kind of hold back. We want everything to be perfect and we want to hold back, and we're nervous about being rejected. I think we have to get used to people saying no, because that's part of the game of raising investment. You will get lots of no's, but not taking that personally. So being visible is about just getting out there and doing it. It sounds a bit trite, but it's true. If we don't enter the arena, we're never going to get to play the game.
Thank you.
Does that kind of make sense?
Yeah, no, it does. And I know that someone's going to ask, so where do how do you know who's an investor and who's not?
Yeah, it's a really great question, and it's not a very easy. There's no straightforward answer to that. If you're talking about angel investors, there are tens of thousands of angel investors out there, and nobody has a database of angel investors that you can kind of go to and say, connect me to those people. The right angel investors will depend on your business, and who you are and what you're doing. So tell me about your business in like a sentence.
Yeah. Sorry, me. Oh yeah. So Docket is Dropbox with a brain. Okay. Single place to manage life administration.
Okay, so it's going to be of interest to the corporate space, technology investors. So anyone who's been connected with Dropbox and understands the issues with that and why your solution is better, great place to start. So searching online for who invested in Dropbox. You can have a look on crunchbase.com, which has got a list of all the businesses and the fundraisers they've ever done. You could look at who the senior executives are in Dropbox who may have left that company. But anybody who's in the technology space, anyone who's had a successful corporate career and understands about IT systems, but those people are going to get what you do quite quickly. So they're not going to be listed on some website that says, here are all the investors in this kind of business. This is people who are your understanding of the industry and people who have made it in that industry who might have money. And it takes a bit of desk work. So usually this kind of stuff, there isn't kind of like a list somewhere that you can find. The other thing about angel investors is that they tend to kind of hang around in groups. So angel syndicates are a great place to find angel investors. And you can find lists of angel syndicates online, angel networks. Just type it into Google. It's, you can have a look on the Enter the Arena website. You'll find resources on there too. But it takes a bit of legwork. You've got to find out who are the people at that angel network. How do you approach them? They have a website which usually tells you that stuff, and find a way to connect with them. And usually you can do that on LinkedIn. And crowdfunding websites is another place where most angel investors are lurking around on crowdfunding websites. So crowdfunding can be a really great option for female founders. It's the most popular way that female founders raise investment. For that very reason, is that it just makes it so much more accessible. If
No,
you're,
it's thank you.
yeah. I mean, I wish there was an easier answer. I wish I could say, here's a database.
There's so many databases, but they almost become more work sifting through the database and figuring out who is actively investing and stuff.
It's very difficult. I mean, we have our own internal database at Enter the Arena, focused really on early stage VCs, and it's really hard work keeping it up to date, because investment funds change their criteria reasonably frequently. So, it's a constant job to do, and quite a significant resource to do that. And there are companies like ours that have that information, but for the very reason that it's actually really hard work to build that database and maintain it is the reason why that stuff just isn't out there for free. There's a commercial imperative there. So if you're working with professional advisors and who can help you, they should be able to connect you with some people, which is what we do. If you're working with us.
Alexandra, do you want to take it away with your question?
Yeah, thank you. And apologies, I'm on a train, but I really wanted to join the session, so I can always type if it breaks up. Can you hear me okay?
Yeah, no problem.
Great. Don't know how good Great Northern Wi-Fi is. So yeah, Julia, thank you. And this is a little bit of a spoiler for me because I'm in the process of reading your book at the moment, and I'm sure you go on to talk about I'm really enjoying it. Thank you. I've been sending around screenshots to some female founders in outrage today from the beginning, particularly about the prettiness factor. So
oh my God,
yeah.
I know, that's outrageous, isn't it?
I know. So one of the things I was really interested in was you touch on the fact that when you did your first raise, kind of really didn't think through the size and scale of what you might need for follow-on rounds. And I was just really interested in that because we're a tech for good, we're a platform business, tech for good company, and we're doing a friends and family round at the moment, and we know that we're going to want to do a sort of larger seed round next year, and we've got a figure in mind for that, but sort of at the moment aren't necessarily clear on what the next stage looks at. And I just wondered if you could touch a bit on how you sort of advise people to think about that, or that would be really great.
It's very common. We often kind of think, oh my God, I need this money now, and I'm just going to go out and raise it. And actually, we need to be thinking much more strategically about what we're doing here. And that really starts with thinking about where do I want to be in 7 years' time, 10 years' time? What's my goal? What's my ambition here? And trying to put some numbers around that. And actually, as women, as female founders, it's something that we often feel quite uncomfortable with. When someone says, well, when do you want to exit this business? And you say, well, I want to exit in 5 years' time. I say, how much do you want to exit for? And most of us are kind of going, I don't know, like whatever I can get for it. And actually, if we do that, that's where we can come unstuck. If you can actually set your stall out and say, right, in 5 years' time, I want to exit this business. And by the time I exit, I want to have reached these milestones. I want to be in 5 different territories. I want X number thousand of customers. So if I'm at that point, what is my revenue and profit profile going to look like? That's what I'm aiming for. And that 5-year plan you then put together, I know there's going to be some finger in the air stuff that goes on there, but a financial forecast it's about your best guess about how you're going to get to that future. And there's going to be loads of things that change along the way. But if you can set your stall out like that, and you can go, right, if I want to get to a 10 million valuation, that means that I'm going to need 500,000 customers spending X amount per year with me. That's the revenue I'm going to be generating. I know my economics of my business. That's the profit I'm going to be generating. And I'm here now. Right. What are the key things I'm going to have to do to get there? And what does that mean for me in terms of investments? And it might be a bit finger in the air, but if you think, I'm over the way, I'm going to need another £500,000 next year. And then I'm going to need another 3 million because I'm going to have to launch in these countries. Having a bit of a sense of that helps you understand the fundraising you're going to need. And you can actually map that out. You can kind of do some cap table planning. This stuff that we do with clients when we're supporting them is actually look at that and kind of go, right, well, if I raise this amount now and I sell 10% of equity, but I need another £500,000 next year. Oh, if my valuation is this next year and I sell this much equity, how much am I left with? And then if I need to do that £2 million raise, and I can do that at a 5 million valuation. What does that look like? You can kind of map it out. And I know it might feel like, oh, I don't know any of that stuff, so I'm not going to, how can I predict that? Oh, I won't do it. If you don't do that strategic planning, you're doing it blind. It's a bit like getting in a car and kind of just driving. And then you wonder why you've driven off a cliff. If you put your destination into the sat nav, you can plot your journey to get there. And you might go on some different routes along the way. You might come across a roadblock, which means you've got to get off the motorway and go around or whatever. But if you don't put your journey, if you don't put your destination in, then you don't know where you're going. And it's the same with fundraising. So whatever you can do, even if it's a bit finger in the air, you will feel much more empowered to know that what's coming. Make sense?
Yeah, it's a really helpful answer. And I think actually sort of we've done a 5-year forecast. We kind of have that. I think at the moment what it is lacking is that later stage kind of round. And I think you're right in terms of going, actually, we're better off putting something in and thinking about that and placing that in as a kind of marker for when we want to expand internationally, and doing that now rather than leaving it out. So thank you. And yeah, really helpful advice also on thinking about the exit and the valuation and the equity at the end, because that is something I've definitely shied away from. Yeah, so really great. Thank you.
Try to retain majority ownership for as long as you possibly can. That's where you want to get to, not just from a money perspective, but from a control perspective.
Definitely. Thank you, Julia.
My pleasure.
Thanks. Hannah.
Hey, so I was wondering, what are some of the questions that you think we need to ask maybe at the very early stages of when we're starting a conversation with them, or even when things are starting to go along, in terms of, I don't know, any red flags, any hiccups that might come up, checking that it's in sync, that kind of stuff.
You mean questions we ask of investors?
Yeah. So I'm thinking particularly angels, like if they're a bit random and you've found them on LinkedIn and you've liked their posts and commented, and then you're like, hey, what do you need? What's the map, basically?
I'm so glad you've asked me that, because so few founders think about asking investors questions. They just start pitching. But it's so important to know that you're pitching to someone who is potentially the right fit. So I think we, and investors love to know that you're interested in them. So asking them questions about their past experience in investing. So what kind of businesses do they like to invest in? What kind of money do they like to put into investments? Do they like to follow on with that money? What's their experience been like investing in startups? What are the challenges have they faced? You're interviewing them as much as they're interviewing you, and their answers can be super revealing, because if you understand where they've had problems with the investments they've made, that can actually really raise some red flags for you, or not. It might kind of make you realize, actually, this is the kind of investor that I want on board. You also want to know if they're actively investing. So many investors love to meet with startups just to kind of keep their hand in and find out what's going on in the market, or they might be thinking about investing in one of your competitors and they're doing a bit of intel and they're not really in the market for it. So knowing that they're an active investor and asking them the question, what was it particularly about this opportunity that piqued your interest, can be very revealing as to how serious they might be. As much of that stuff you can do before you start pitching, the more empowered you will be to then have a really productive pitch conversation with an investor, because you can then tailor it. I'm not saying, you tailor it to what they're you tailor the messaging to what they're looking for, not tailoring your business to what they're looking for, but it helps you understand the things that are important to them so that you can highlight those when you're explaining your pitch. But I'm so glad you asked me that question, and I hope everybody takes something away from that, is that you absolutely must ask investors as many questions as possible about them, their personal criteria and why they what they do with the investment, for sure.
That's really, really helpful, Julia. And just on that, is there anything from this might be a bit of a naive type question, but is there anything from a like financial standpoint you need to ask them? Like, yeah, like
are they good for the money?
yeah, are they good for the money? Like, how much do they are they somebody who puts in a lot or a little?
Yeah, I think asking if they're actively investing at the moment, what typical, and again, you can ask it in, what's the typical ticket size that they like to come in on? Do they like to come in as a lead investor? Do they like to follow on their money? What time frame are they looking for in terms of a return on their investment? Some of the questions you can ask for them. You can also ask them, is in terms of their investments, have they got liquid capital at the moment? And this trips people up. I've seen this happen time and time again. Investors say, yes, I'm actively investing, and then they say they want to invest, but then it turns out that they haven't actually got that money in liquid form. They've got to sell another investment or an asset to be able to do it, and then lo and behold, that takes 6 months to do. Meanwhile, you've put all your eggs into that particular investor and stopped all your other conversations, and you suddenly end up where you don't have an investor because they can't liquidate their assets. And if you're not getting clear answers to those questions, you've got to ask why. A good investor will be open and honest about those things with you.
That's great. Thank you so much. Really appreciate it.
Keith, do you want?
Hi, Julia. Keith here. I'm about to explore to get my first funding. I've got 2 questions actually. First one is, based on experience, has all the lead investors been friends and family? I mean, I know that's the common path to go. And second questions is that, based on your experience, do you think we have to pitch differently when we speak to a VC or when we speak to angels?
Yeah. So the first question, did you say for the first round, is it usually?
Yeah, or like finding a lead investors, like, yeah. I'm just about to embark on that, and yeah, at the moment I've just started and I'm trying not to be demotivated, but yeah.
Don't be demotivated, you can do this. Yeah, I mean, first rounds are often friends and family, but not always. It depends on the type of business you've got, what your network's like, and how much money you need, because some businesses need too much money at the start that could ever be covered by friends and family. But friends and family, and also I think people perceive friends and family to mean it has to be a personal friend or a family member. And friends and family actually means a lot more than that. It kind of means your network, which can be quite broad. It can be somebody that used to be your boss in a company that you used to work at, or a local business leader that you know because your kids are at school together, or it's much broader than the literal meaning of friends and family. So not always, but often those early rounds do start there because those are the people that know and trust you. So it's kind of easier because they already know you. They know you're good for it. They know you're going to work really hard to make this successful.
And should I at least, I don't know, have something in places before I start approaching to them, like term sheet or something, or can I just have a coffee with them and speak to them about it? Yeah.
I mean, I think it's always worth having, you need, your plans for how you're going to grow the business, a financial forecast, maybe a pitch deck to explain to them. Okay. I mean, at the end of the day, even though they're friends and family, they're still going to be investing in your business, and they still need to be aware of the risk that involves, the capital at risk thing, so that they don't put more money into your business than they're prepared to lose. So the more preparation you have so that you can show them your plans, the better, because then you can walk them through it. I don't think you don't need a term sheet. You can do it all over coffee. It doesn't have to be super formal, but showing them your plans and that you've thought through your growth, I think it will give them confidence that you know what you're doing.
Okay.
Your second question, is it different when you're talking to venture capital firms versus angel investors? Yes and no. Angel investors don't have to invest their money. It's their personal money. They could put it in the bank, they could buy property, they could do all sorts of things with it. So they have to really fall in love with you and your business and really connect with the cause, I think, more than anything. Whereas a venture capital firm has a mandate to invest. They have a fund and they have to invest it. So they think about money in a very different way. And venture capital firms often have quite different metrics that they will use to assess your business. They're very metrics driven. So that's why it can be quite hard when you're an early stage business, because they often say, come back when you've got more traction. And what they mean by that is come back when I can start to see how this business functions from a key performance indicator perspective, so that if I put more money in now, I can see how that business will grow. Not always. So there is a slightly different approach. It can be more, so it's probably more personal with angel investors, and whereas venture capital firms are much more versed in understanding how a business might scale and what the kind of economics of that business need to look like to be successful.
Okay.
And
thanks.
Not every business is suited to venture capital. That is for sure.
Thank you.
I appreciate we've only had half an hour. It's 3 o'clock. We've got our next speaker has just entered the room. I know there's so many more questions that came in on the chat, and we've got a few people with their hands up. If people want to connect with you, Julia, someone's also asked for a link to the book, but what's the best way that they get in touch?
Yeah, I mean, I would definitely say, buy the book. That's your quickest way, in all truth. That's probably your quickest way to a lot of the questions you might have. And actually, it's better that you do that, because you're going to get really comprehensive stuff from here, rather than me try and deal with everybody's questions individually over email or whatever, which is going to be quite challenging, if I'm honest with you, just because I'm quite busy. So I would say, I bet you most of the answers will be in here. But once you've read the book, and if you have more questions and you need some more support, then please, do let me know. But also do go and have a look at enterthearena.co.uk. There are lots of great resources on there as well. It's a brilliant podcast to listen to called Fundraising Stories with Female Founders, and you will learn a lot by listening to those episodes. So get into that world online, and start your journey there. Start your journey with the book. And then once you've done all of that, if you've got more questions, then of course I'm happy to help.
And for everyone here, we will post up a link to the Amazon link for you to buy the book shortly. Gigi will post that for everybody here, and we'll post it in the WhatsApp group as well. Thank you so much, Julia.
Pleasure. I wish I had longer. I'm so sorry I couldn't make it earlier, but I wish you all the very best on your growth journeys.
Thank you so much. And everybody else, stay on.